IREN closed Wednesday session at $43.96, up $2.84, a rebound of just under 7%. After a brutal sell-off on Tuesday where the stock collapsed more than 15% in a single session, today's recovery stands out, not only because of the size of the bounce, but because of what it might represent. For a stock that has been hit with relentless selling pressure tied to dilution fears, convertible notes, and heavy financing requirements, a strong green day raises questions. Is this simply a reflexive bounce after a violent sell-off, or is the market attempting to find a floor for IREN? Understanding this rebound requires looking closely at what happened today, what happened yesterday, and the broader forces shaping investor sentiment toward IREN. Yesterday's drop did real psychological damage. When a stock falls that hard in a single session, especially after already declining sharply in preceding weeks, traders tend to panic. Fear kicks in quickly, and sentiment flips from cautious optimism to outright pessimism. Heavy selling pressure had been building around concerns linked to warrants, dilution, and financing structures that have left investors uneasy about IREN's near-term capital strategy. Today's bounce needs to be viewed in that context. It didn't happen in a vacuum. It came one day after a capitulation-style sell-off, and that is a starting point for understanding why the stock behaved the way it did. Part of today's strength can be attributed to simple market mechanics. When a stock falls sharply and becomes extremely oversold, some buyers step in purely for technical reasons. Short-term traders see opportunity in depressed prices. Shorts who press their bets aggressively into the previous day's sell-off begin covering. And some long-term investors view the panic as overdone, especially if they believe the long-term story hasn't fundamentally changed. That dynamic was likely at play today. After dropping more than 15% in a single session, IREN was ripe for a short-term bounce. But there's more to the rebound than just oversold conditions. Today also saw strength in parts of the broader AI infrastructure sector. Marvell Technologies, a major player involved in data center networking and AI chip architecture, had a strong day after investors reacted positively to a new acquisition and growth update. When sentiment improves even slightly in the AI ecosystem, high-beta names like IREN tend to catch some of that momentum. This doesn't mean that Marvell's news directly impacts IREN's fundamentals, but it does influence how investors feel about the AI infrastructure category as a whole. When one major player shows strength, it can lift the confidence of traders watching related companies. Another factor supporting today's bounce is the simple reality that markets often overreact to dilution-related news. Warrants and convertible notes always spook investors, but the degree to which the market prices that fear in can be excessive, especially in the short run. Tuesday's sell-off may have overcorrected. Once traders realize that the sky isn't falling immediately, some buying naturally comes back into the stock. Today's green session may be partly the market saying, the dilution risk is serious, but maybe yesterday went too far. However, even with today's rebound, the underlying concerns weighing on IREN haven't suddenly disappeared. The company remains in an extremely capital-intensive phase of its transformation. Building out AI cloud infrastructure, scaling data centers, securing power, deploying GPU clusters, and servicing hyperscale partners requires enormous upfront investment. That investment does not immediately convert into revenue. It does not instantly translate into cash flow. And it often requires raising money through financing deals that increase the share count or introduce debt that may eventually convert into equity. These realities are why investors have been hypersensitive to any signs of dilution. They know that IREN's success hinges on its ability to execute at scale, but execution requires capital. The fear is not that IREN will simply dilute shareholders once. The fear is that dilution could become a cycle, repeated over time as the company continues to fund its expansion. That concern doesn't disappear because the stock moved up 7% today. It remains part of the long-term risk profile. But there is also reason for optimism. IREN is not raising capital aimlessly. The company is investing in infrastructure that could place it at the forefront of one of the fastest-growing technology sectors in the world. Demand for AI computing power is growing exponentially. Companies like Microsoft, Meta, Amazon, OpenAI, and Google are competing for access to GPU clusters. Data centers are expanding at record speed to keep up with AI model training, inference workloads, and cloud compute needs. A company that builds the right infrastructure at the right time could become a critical part of the global AI compute supply chain. IREN's partnership with Microsoft continues to stand out as one of the most significant legitimizing elements in its story. It signals that a major hyperscaler sees value in what IREN is building. That kind of validation is not something most small or mid-cap companies receive. For long-term investors, this partnership remains the cornerstone of the bull thesis. If IREN executes, scales efficiently, and delivers the infrastructure Microsoft needs, the payoff could be substantial. The challenge is navigating the capital requirements needed to reach that point. Today's bounce, therefore, should be viewed through a balanced lens. On one hand, it shows that not all investors are running for the exits. There is still interest in the long-term story. There are still buyers who see value. And the stock's ability to recover nearly 7% after a brutal day indicates that sentiment is not entirely broken. On the other hand, it also reflects a fragile equilibrium. When a stock rebounds after a big drop, it often does so only to test lower levels again if the underlying issues remain unresolved. Today's move may simply be a pause in a larger process of repricing dilution risk. For investors trying to understand what comes next, there are several key dynamics to watch closely. The first is how the stock behaves around the $43 to $44 range. If buyers continue to support the stock at these levels, it could indicate that the market is attempting to form a base. If support fails, the stock could retest lower levels in the high 30s. The second dynamic to watch is whether the company releases additional filings related to warrants, convertibles, or equity raises. Any new financing activity will directly influence short-term sentiment. The third dynamic is whether the broader AI infrastructure sector continues to strengthen. Companies like Marvell, Nvidia, Broadcom, and other data center partners play an indirect role in shaping sentiment. When the sector is strong, investors become more comfortable taking risks on companies like IREN. When the sector weakens, the opposite happens. And the fourth dynamic is company-specific execution. Traders and long-term investors alike want to see progress, updated deployment timelines, revenue visibility from cloud workloads, GPU cluster updates, power and cooling infrastructure news, and partnership expansion. Today's recovery may also offer an emotional reset for some investors. Watching a stock fall 15% in a single day is psychologically destabilizing. It heightens fear, triggers panic selling, and shakes confidence. A green day following such a drop can act as a stabilizer, giving investors time to reassess rather than react. But stabilization is not the same as confirmation. A single positive session doesn't guarantee that the worst is over. It simply shows that buyers exist. For today, that's enough to give the stock breathing room. In the bigger picture, IREN continues to exist between two powerful forces. The bullish force is the long-term potential of AI infrastructure and the possibility that IREN becomes a major supplier of the compute capacity the world needs. The bearish force is the dilution required to get there. These two forces will shape IREN stock for months, even years. Days like today don't resolve that tension, but they do offer insight into how the market is processing it. Ultimately, what matters most is not the 7% bounce, but what the bounce represents. It represents resilience after fear. It represents the fact that some market participants still believe in the long-term vision. It represents the idea that the sell-off may have gone too far too fast. But it also represents the fragility of sentiment and the risks inherent in financing-dependent growth stories. IREN will continue to be volatile. It will continue to face scrutiny. It will continue to require capital. And it will continue to be judged not only by its fundraising decisions, but by its ability to deliver real infrastructure that generates real revenue. Today's bounce is an important moment, but it is not the final verdict. It is simply the market taking a breath in between waves of uncertainty. What happens next depends on execution, clarity, market conditions, and the company's ability to turn potential into performance.